Welcome back. Now that we're in the middle of 2025, in the 12 to 18 months after the Bitcoin halving of 2024, in what I believe is in the final stages of this bull market, I keep getting asked, Cryptoviser, which coins are worth buying at this point in the cycle? And that's what we're going to be going over. We're going to be looking at the fundamentals, and we're going to really understand where these projects stand, what technology they actually have deployed already, what their metrics on chain look like today. And this is what we need to be focusing on, not what these projects are going to be doing next year or the year after that or within 5 or 10 years. We are in the 12 to 18 months after the Bitcoin halving, which historically in Bitcoin and crypto markets is the most volatile and the most violent and the uptrend in the market. And we're starting to see that as companies and people are very bullish, the most bullish they've ever been at literal all-time record highs. And this goes really against kind of all investment thesis and theories of buying low and selling high. Now we are at all-time record highs, and people are saying, buy the top, buy the top, buy the top, buy the top. Well, is that what we should be doing? Well, we're going to be breaking it all down in today's video. Again, these are just my opinions and my analysis of the market. You may disagree, but that's the beauty of being able to invest in our own portfolios. I'm just letting you guys know my opinions on the market. This is not indicative of where my investments lie, right? Because maybe I'm in these coins, maybe I'm not. We're at the point in the cycle where I'm not really going to be talking about what is in my portfolio, because in the final stages of the bull market, it is important that you make your own decisions on when you're going to take profit. Are you going to hold through the bear market? Are you going in this for the long term, or are you just looking to take profits? So make sure you guys do give this video a free thumbs up, hit that subscribe button. That way you never miss a new video. We upload almost every single day. And we do these deep dives into understanding the markets, and sometimes deep dives into individual cryptos to understand, are these good investments? So we'd love to have you join the channel by giving the video a thumbs up or hitting subscribe, or you can also become a channel member. Link down below in the description, or you can click the join button here on YouTube. But let's get right into it. Now, a lot of people in the crypto space focus on coin market cap, and they focus on the market cap because this historically has been how really the market kind of ranks the individual cryptos. But as we have gone over tirelessly and endlessly on this channel, just because the crypto is in the top 10 or top 20 or even top 50 doesn't mean that they actually have a viable product, doesn't mean that they actually have usage, doesn't mean that they actually have desire to utilize the product. And this is a very hard concept for a lot of people to understand. And they just see it as, oh, well, I can just keep investing. Now, let's look at XRP, for example. XRP has a $137 billion valuation, no interoperability, no decentralized finance, no smart contracts, and no regulated stablecoins. They, besides their own RLUSD, but that's fairly new. They're not tied into Tether. They're not tied into USDC. So they're a siloed blockchain where Ripple, the developer of this ecosystem, is selling XRP on the open market regularly. Now, in my view, this is a bearish signal. This is a bearish sentiment, but the market doesn't care. The market cap keeps going higher, even though they keep selling more on the open market. And so we may be in a phase, we may be at the stage in the maturity of this new ecosystem where we look at these things differently. It's kind of similar to like gold and silver. Like if you think about gold, silver, platinum, palladium, all the metals, right? Yeah, people look at the market cap, but they're also looking at the utilization and the usage, right? Gold is used in jewelry, it's used in electronics, it's used in a lot of different things. And granted, the other precious metals are as well, but you have to look at the scarcity of it. You have to look at the use case, the sentiment, right? How people feel about gold versus silver. If you ask most people, which is better, gold or silver? Just that, right? You're not telling them how much. You're not telling them what it's worth. You just say, which is better, gold or silver? Most people are going to say gold. And if you say why, they say, well, it's worth more. Well, yeah, it depends on how much you're talking about. But that's the sentiment, right? The sentiment doesn't care about where the market caps are. And I think that is where we are at the point in the cycle and at the point in the life cycle of crypto. Hunter Horsley, who is the CEO of Bitwise Investments, which is one of the Bitcoin ETF issuers, basically brought this point up on X the other day. And I think it's really important as we move through this video to kind of remove the market cap distinction of these coins. And we're really going to be looking at the fundamentals of these networks. What are they able to do? What have they already captured in terms of users, developers, technology, interoperability, and all of the above? And so if we look at what the Bitwise CEO said, he said, I think coin market cap leaderboard era of crypto is close to its end. Specifically talking about market caps, not necessarily just the website. But is it interesting to invest in Walmart or Adobe or MasterCard or Johnson & Johnson? The answer is no. He said you don't have to answer that question by looking to see how their rankings are in the S&P 500 and the market caps compare. You don't invest in ExxonMobil because its market cap is cheaper than Eli Lilly. You develop a thesis specific to each business and its space and prospects. I think that's what's coming in crypto. These things are not the same. And I completely agree with what Hunter has said here. And basically, like what I was just explaining to you about the fundamentals of XRP versus where the price is or the market cap is, it doesn't really make sense. But when you look at the price and when you look at the top 10 cryptos, newer investors, they are coming into the space. They don't know, they don't understand what tokenomics are. They don't know what the market cap is. They don't know what the emission or inflation schedule of these coins are. That's like 5 steps in, right? They're on step 1, right? So they're just looking at the top 10 and saying, oh, well, Tether's cheap. Let me buy Tether. And I know people do that, right? They buy Tether. They don't even know what it is. They're just like, oh, it's cheap. And so when you look at the top 10, really the ones under $1 is Cardano, Dogecoin, and XRP, but XRP is the number 1. And then if you go and do some research on XRP, you got the whole XRP army pushing that this is going to be the global reserve currency. The banks are going to be using it. It's the ISO 222 or whatever the thing is. They've been saying all these things for years and years. And I'm not against XRP or Ripple. I'm just trying to explain. Some people would argue that the market cap's valuation is way too high compared to these other cryptos like Ethereum or Solana, which have way more interoperability, way more usage, way more development activity, way more smart contract capabilities, etc. Like we can keep going on and on. But these are different technologies, right? Ripple is trying to become a cross-border transactor, a payment system, where Ethereum and Solana, they're trying to become decentralized finance, right? The banks of crypto in a very the most easy to understand sense, right? So if we remove the market cap, how do we even look at these cryptos? Like, do we just go down the list and say, oh, is this one good? Is this one good? Is this one good? Is this one good? No. There are a lot of different metrics that you can look for. And if you look at this is crypto bubbles. And if we look at the last year, which cryptos do we see having the best returns? Some of these coins that nobody really talks about, virtual, I don't even know what virtual is. And it has a 1,600% increase in the last year. This is more than Bitcoin. This is more than Render. This is more than Say. This is more than Ethereum. And so are we missing anything, right? If we're only focused on Bitcoin, Ethereum, XRP, Cardano, all the top 10, then we're missing out on potentially larger growth. I mean, XLM is up 164% versus Bitcoin, which is only up 60% in the 1-year chart. And so how do we assess, like, where do we invest, especially if we're at the end stages of the bull market for 2024 and 2025? If we are at the end stages, that means we're going to be rotating into a bear market at some point. And so do I now invest in virtual after it's already done 1,600%, or do I let me make this so you can see it. Or do I invest in something else that doesn't have those kind of returns? Well, this is where the other metrics of the market come into play. And so we're going to be exploring some of these other metrics to identify really where we should be putting our money and focusing our attention. And so one of these dashboards is called the EQ dashboard. And basically, it's kind of like the IQ of crypto. And they're looking at many different things, right? They're looking at the price changes. They're looking at the market cap. They're looking at their core rating. Now, obviously, this is specific to this company or this website, Crypto EQ. But you can see the price signals as well. Where are the price signals? Why are the price signals that way? Like, if you look here, according to this, it's saying Bitcoin is in the sell zone, Ethereum, sell zone, XRP, sell zone. Why is it saying all the top 10 coins are basically in the sell zone? Potentially because they've already made a run, potentially because they're already at all-time record highs, minus some of them like Ethereum, which is quite annoying. The sentiment signal is also very important, right? How does the market feel about these cryptos? How does the analysts and investors think about the cryptos? And so we're not going to go too deep into this, but this is one website that you can look at and kind of dig a little bit deeper into where is the investor signal? Is it buy? Is it sell? Well, this is showing that the investor signal is sell. And obviously, you can do a little bit more research and understand why it's showing sell. But that's not really, this is more just price action and everything at a glance. I really want to understand what is going on in the development space. What are they building? What have they already built? We've talked about this before. We're at the point in crypto where we're not talking about what they can do in 5 years from now. We're talking about what they can do today. Because if the thesis is correct that we will go into a bear market at some point in 26 or 2027, well, in the bear market, we want to be in coins that have fundamentals or be able to deploy money in the bear market to these coins that have great fundamentals. And one of the things that we have to understand is where the development activity is on these chains. And so this website called developerreport.com shows you global crypto developer share last year. And obviously, hopefully, this is going to continue to get updated with time. But this can show you up to about, it looks like November. This report goes up to November of 2024, which chains have most active developers, where these developers are, how long they've been involved in developing these ecosystems, and also which cryptos they're developing. And you can see here, again, this is from 2024. The data has not been updated to 2025 as of yet. Hopefully they begin to update this info. But either way, you can see that Ethereum virtual machine stack, Ethereum together have about 6,000 full-time developers. These are developers who commit codes 10 plus days out of a month. And basically they commit codes to the GitHub. So you can actually go and see what they're submitting to improve the protocol or fix bugs or update or add new features, etc. And then you can see after that, the next largest is Solana. Now we know this, right? We know Ethereum has the largest share of developers in all of crypto. No matter what individual crypto projects state, it's all BS, right? They could say, oh, we have the most developer activity. Well, if you have one developer submitting things to GitHub 15 times a day, well, I would imagine you're going to have the most developer activity. But is this developing anything, right? I mean, think about it. Imagine we had XRP up here in the top of the list and they had the most full-time developers, but they didn't actually have any products built on their ecosystem. It's like, what are those developers doing? And so it should be no surprise that we have Ethereum and Solana's virtual stack all the way at the top with the most developers who are working on the protocol, at least in 2024. And this is another indicator of kind of, I'm not surprised that Ethereum and Solana are at the top, and neither should you be. And so if you're invested in a coin that has very little developer activity and even or high developer activity, but low actual output of products, that's a problem. And so again, what we're seeing here as we're kind of going through understanding which coins are worth buying, it's not just one metric, right? A lot of people just focus on market cap. That's not the metric to look for. There's really a blend of metrics, the same way as that we're doing research specifically on this channel, but hopefully you're doing your own research as well. Your research should take my video or another, YouTuber's video as one little piece of the pie, right? So maybe the pie has 10 pieces. Cryptoviser saying his analysis is, wow, this coin is worth buying. Another one says this coin is not worth buying. The developer activity shows it's very high. They have a lot of DeFi. They have a lot of smart contracts. They have a lot of development activity. They have a lot of dApps that are being used. Those are all slices of the pie that kind of make you say, okay, well, I got 9 slices that are saying bullish, and I have 1 slice that's saying bearish. What should I do, right? And maybe you're going to still be bearish because all the indicators are saying bullish and you want to be opposite what the indicators are showing. That's something that you could do as well. But what I'm trying to explain is that you can't just take one metric and apply it and say this is the best crypto in the world, this is the best blockchain in the world. But when we are looking at the developer activity and we see Ethereum and Solana clearly have the most, this is not a surprise to me and it shouldn't be a surprise to you. So which other coins have developer activity? Well, Polkadot's network stack and Polkadot have about 1,000 total developers full time, and Cosmos 436, Bitcoin 359. And by the way, these are not all the developers. These are just full-time developers that added 10 commits 10 plus days out of the month. So if you just did 9 days, you're not considered a full-time developer. But you can see the total developers in this final column. And then Polygon, Base, Arbitrum, Move, and Internet Computer, right? And so when we look at these chains, we can say that, Solana, Ethereum, obviously, this is not a surprise. Polkadot, maybe it's a little bit of a surprise that Polkadot has more developer activity than, let's say, Bitcoin or Polygon or Base or Arbitrum. But it's not a surprise that they have development activity. And so, again, taking this into account, also taking into account this is from 2024, we don't have the 2025 information just yet. But this is a great indicator of where the developers are spending their time. Because think about it, if a chain is saying that they're the best chain in the world, they have the best technology, and no developers are doing anything on it, or you have 1 million developers and there's no products, it's like, what are they doing? And is this investable? And that brings us to the DeFi space, because DeFi is super important, decentralized finance. And so the second kind of metric that I would look at is just go to DeFi Llama and click on chains and then actually look into these chains. There's many different things, like people typically just look at the total value locked, the TVL. This shows you how much coins are actually locked into the system for decentralized finance or smart contracts or whatever the situation is. And this is not the only metric we should be looking at, because obviously Ethereum is by far the largest, with Solana being number 2. And this matches the developer activity on these chains, right? Ethereum's number 1, Solana's number 2. And so it is kind of in line. Obviously, Bitcoin is up there as well, Tron, Binance, Base, Arbitrum, Sui, Avalanche, Hyperliquid. And so what are we seeing? We're seeing Ethereum, Solana, Bitcoin, Base, and Arbitrum multiple times now. And you can even click in to actually see how many protocols they have, how many active addresses on DeFi, and actually look at the activity. The thing to keep in mind is that these are highly interoperable chains, meaning that they have interoperability. They can move value, move information from one chain to another. This is critical for the decentralized finance space. And so if you see a coin up here that, or I should say a blockchain, that has very high DeFi, but no interoperability, well, that means that DeFi is siloed in that individual blockchain. And we do have that with some of these cryptos out here. Not going to go into all of them, but you guys kind of know. Like if I saw XRP here, that's a siloed blockchain. There is no interoperability. Cardano, another example. And the way that you can see that is you click into the crypto, and then you just look under here on the protocol rankings. You can see Liquid, which is a lending platform on Cardano. It's only compatible with Cardano. Another swap platform, only compatible with Cardano. And you can see all of these are only compatible with one chain, and that's Cardano. Muesli Swap is also compatible with Milk Ometa, which is basically another Cardano offshoot project. And so there is no interoperability within Cardano. And so can decentralized finance on Cardano actually be decentralized finance? The answer is no, because decentralized finance needs a high level of interoperability so that you can participate in decentralized finance throughout all of crypto, not just in that one individual chain. Now, to show you the comparison between what we just showed you in Cardano and the largest protocol, Ethereum, what you can see here is that Ethereum's largest protocol, Lido Finance, is interoperable with multiple different blockchains. Obviously, Terra Luna, it's still a blockchain, but we know that that ecosystem collapsed. But regardless, Solana, Moonriver, Moonbeam. It's also compatible with Aave. And look at how many platforms Aave is interoperated with 17 different chains. And so, in my view, if I don't see a chain that's highly interoperable, and it's very easy, this is total, guys, this is just looking at the data, right? People are going to say, Cryptoviser, you're just fudding. You're just fudding. And it's like, what am I fudding? I'm literally showing you the data. Like, in my view, when I am looking at a coin or I'm hearing people talking about a coin outside of Bitcoin, and they're like, oh, this is the best chain in the world, the first thing I do is I come to DeFi Llama and I look. Okay, so when World Liberty Finance, which is the Trump organization's crypto company, when they bought Aave, I owned Aave, and I went and looked at Aave's interoperability, and I'm like, 17 chains. I'm sure many of you probably didn't even know Aave was interoperable with 17 chains, but it's actually interoperable with more, because if there's a chain that's interoperated with any of these 17 chains, that means that Aave is interoperated with them as well. For example, let's say Aave was not interoperable with Base. Okay, let's just say it wasn't interoperable with Base, Coinbase's blockchain. Well, Aave is interoperable with Ethereum. So you could essentially move value from Aave to Ethereum and then move it to Base. And so Aave would still be interoperable. And so in this case, Aave is, when I see 17 chains, it tells me this is actually probably more like 30 to 50 different chains because of what I just explained. Once you're interoperable with one chain that's highly interoperable with many different chains, you open up that access to all those different chains. It's like, for instance, let's say you're running a business. Let's say you're running a restaurant and you're just expecting people to come into your restaurant. Well, what do most restaurants do now? They open up on Grubhub, Uber Eats, DoorDash, Caviar. They open up on all these platforms. And this now gives them access to all of these new customers and gives the customers access to all of these new restaurants. Now, you could say, well, they're losing a little bit there because they're giving some to these companies and they're losing some money on that, which is true. But at the end of the day, if Aave didn't interoperate with Ethereum, it wouldn't have the usage because of Ethereum and all the interoperability that Ethereum opens up. The same way that that restaurant wouldn't have the market share if they weren't on the apps and their competitors were, and they were just like, nope, we're just going to get our own customers our own way, and we're not going to use any of these apps, which everybody are using. That's, in my view, like a perfect example of why interoperability is key. It's better to have the interoperability capabilities than to have none. And so when we're talking about which coins we want to buy, there's literally, this is one of the key indicators for me whether this is an investable project or not. And just because, like, for instance, the eigenlayer is only compatible with Ethereum, well, it was built for Ethereum. And so it's not interoperable. But again, because eigenlayer is interoperable with Ethereum, it opens up the access to all of the capabilities of the Ethereum network. And this is critical. This is very critical, especially as we're seeing decentralized finance and traditional finance beginning to merge. And so anybody who tells you different about the, like, even Uniswap, look at Uniswap. This is like a DEX that almost any project could connect with. And so if your project is not on here, why? Right? Why? At this point, any blockchain, XRP, Cardano, Stellar, Litecoin, any of these ecosystems that have no interoperability, there is no excuse at this point, period. There's just no excuse. And so that is, for me, one of the key indicators, but there's more. There's a lot of other metrics that we want to look for as well. And a lot of this goes back into what we were just talking about with building. Now, if you look at Crypto Rank website, you can see the Blockchain Ecosystem Explorer. And the reason I love this is because it gives us at a glance what these ecosystems have on them today, Because remember, even if we're not at the end of the bull market, right? The further we go, the more blockchains pop up, the more that we get promised this chain can do this chain can do this, and they're all distractions, right? We just saw recently Sui had a major hack on their ecosystem, not on the protocol itself. It was on a DEX within the protocol. But people were like, oh, this is not a big deal. It's not really going to affect Sui. But then Sui validators went and freeze and seized the coins and are returning them back to the DEX. Now, whether you agree with that or not, whether you think that's centralized or not, I don't know. I don't know what the correct way to go about that would be. But I do know that Sui has not been around long enough to see what it's capable of, what security flaws and bugs we have, right? So some of the longer standing ecosystems, I would imagine, are probably way better. I mean, again, even if we just look at DeFi Llama and we type in, we see where Sui lands on the DeFi list, I would imagine it's pretty high. Yeah, it's in the top 10, 63 protocols and $1.56 billion in TVL. Now, what's very important to keep in mind with a blockchain like Sui, and Sui is not the only one, I'm just using it as an example because of the recent issue, is that these newer chains, because of their tokenomics, things look a certain way when they may not actually be that way. For instance, Sui has most of their coins still locked, meaning their actual, their market cap is inflated significantly, in my view, because of this situation, right? Only 33% of all the Sui that are in existence are in the circulating supply. And remember, the market cap determines the circulating supply. Circulating supply determines the market cap. So when one of these changes, the other potentially will change. Well, if circulating supply changes, market cap should change. And if it doesn't change and it stays the same while more circulating supply is increasing, the price based on supply demand metrics would go down. The other thing to keep in mind about Sui is they have a very large unlock schedule where every single month moving forward, you can see that right here on the screen, they are emitting or inflating or releasing $213 million of coins, $58 million Sui every single month. And so while you see, oh, well, Sui's the number 8 DeFi ecosystem. Well, when you look at the tokenomics, they're continuing to emit more and more and more coins. And over the course of time, that is not great for the price. That is not good for retail investors. And it's also kind of covering up what is actually in DeFi within Sui, right? For the most part, nobody's really using Sui versus Solana or Ethereum. And now that the chain reversed these transactions and freeze and seize these coins, there's a lot of questions about whether this is a viable blockchain and are they going to do this for every single hack that occurs on the chain. And so you have to take all of this into context, right? You have to dig a little bit deeper. Once you see a protocol and you're like, well, this protocol looks kind of good, then you have to go learn about the tokenomics. You have to learn about the ecosystem, because this will tell us a little bit more about where these projects really stand. For instance, on Sui, there is about 128 projects and about 18 are new. Now, all of those projects are basically new because Sui is a newer blockchain. And so like we were just talking about before, we don't know all the security flaws. We don't know all the bugs, all the smart contract potential exploits. And because it's a new ecosystem, when you think about something like Solana or Polygon or Ethereum, Binance Chain, these have been around a lot longer. So they're more time tested and they have more trust of the ecosystem versus a newer ecosystem like Sui. And so when we look at the Blockchain Explorer, I mean, you could see Ethereum has almost 1,200 projects, Solana almost 1,000, Binance almost 900, Base 550, Polygon 493, Arbitrum 408, Avalanche 241. And so these are telling us where people are building and where people are deploying projects. There's a lot of ecosystems that they don't want to build a bridge because they're scared it's going to get hacked. They don't want to build DeFi ecosystems because people are going to try to steal the money. It's like, so you're not going to build anything or deploy anything because you're scared of everything happening. It's like what is the point of your blockchain, right? And that's really what we have to think about when we're looking at these ecosystems. Because if we are in the final stages of the bull run, we want to be in the strongest, most competitive, most trusted, and most used ecosystems. And to understand which are the most used and which have the most capabilities, we need to go to Token Terminal. Now, by the way, if you're up to this point in the video, don't forget to give the video a thumbs up, hit that subscribe button. We upload every single day to bring you the latest happening in the financial world. And so here on Token Terminal, we can get a really good understanding of where these blockchains stand in terms of their capabilities and in terms of where they compare to the other ecosystems. Because like I've said before, guys, it's not about what they're saying they're going to do. It's about what they have done, what they are doing, right? And so when we look at transactions per second, you can see there's two clear leaders here. One is Solana and one is Internet Computer. Now, these two keep going back and forth with how many transactions per second they can actually perform. You can see here on the Solana dashboard, we're currently, when I'm recording this video, about 4,200 transactions per second. And if we go to the ICP dashboard, the Internet Computer dashboard, you can see the transaction volume is about 4,000 transactions per second. But over the last couple of weeks, we actually saw Internet Computer passing Solana. Why was it passing Solana? There's a lot of different theories. Potentially new AI products and capabilities were being tested. That's my assumption on it. But regardless, it doesn't really matter whether Solana is the fastest or Internet Computer is the fastest. The point is they're both very fast, and they're setting the tone for the rest of crypto. I mean, if you guys don't remember, Tron is down here with 109 transactions per second. I remember back in 2017, 2018, one of those two, the Tron ecosystem, Justin Sun, were going out and saying, oh, we're going to have 1 million transactions per second. They have 109 years later. Years later, they have only 109. That's very far off from 1 million per second. And it's not just Tron, it's all of these other chains. Chain after chain, we're going to do a bazillion transactions per second. We're going to do 1,000 bazillion transactions, and none of them even get over 1,000, besides Internet Computer and Solana. And so going into a bear market, if we are going into, or when we go into a bear market, we have to identify like, wait, these protocols continue to say that they're going to have the most transactions per second, but none of them come even close, not even close to Solana or Internet Computer, right? And so these two have clearly demonstrated that they can process very high throughput when many of the other chains haven't proved that at all. And so what do you think is going to happen in a bear market? The developers, the builders, they're going to be looking at these and saying, oh, wow, we need to start building on these chains because these chains have the best throughput. And there's a lot of other metrics. I mean, we could go through every single metric. Let's look at stable coin transfer volume, because this is also very important. Stable coins indicate to us where the money is moving. And obviously, Circle, Tether, and Sky. I wonder if we can pull this by chain. All blockchains. I think this is because those are, yeah. We're just going to have to, I thought that was going to be by chain, but whatever. Anyway, let's look at transaction count, because this will tell us how many actual transactions we're going through. And you can see Solana by far over the last 6 months, 68 billion transactions. No other blockchain comes even close, not even close. Now, at some point, we would have to remove Solana from these metrics to really understand where the rest of the ecosystem of crypto lies. Because if it's just Solana and everything being number one, well, what's number two and number three and number four? And the other thing to think about is these smaller ones, or the underperforming ones compared to Solana, they have the ability to advance their technologies to get where Solana is. And so you really have to look at the developer activity, what products and projects are built on the ecosystem to see if that is actually viable. Like if there's no development activity, why would you think that these ecosystems are working to improve their TPS or actual transaction count? Now let's look at the average trading volume. This is per trade. And you can see a lot of this is coins that nobody even heard of, right? Cow protocol, Tokenion, Integral. Like what are these coins? Never even heard of these for the most part. Let's put this in blockchain layer ones. Yeah, it's not showing us that. I wish this also showed us the like the top 100 coins. But anyway, so yeah, there's a lot of different metrics that you can look here. The fees are also very important to understand. How is the network actually making money? Obviously, Tether is making a lot of money. Circle's making a lot of money because of the stable coins. But Tron is also making quite a bit of money. Outside of that, you have Uniswap, Jito, Radium, Lido, Pump Fund, Solana, Aave, Pancake Swap, Ethereum, Flashbots. And so what I'm seeing here as a trend in all the metrics that I've just gone over with you guys is that it seems that these larger protocols that have the most built on it, most of their metrics outside of like these big spikes like we saw with Solana, if we remove Solana, it's really all these ecosystems that have building out their DeFi and their smart contracts over the last few years. And this tells you this is where the usage is going. We know the banks are getting into DeFi. We know that TradFi is, I mean, JP Morgan just tested DeFi transactions on Ondo. It's not the first time they've done this in the blockchain space. Now they're all talking about stable coins, right? Because decentralized finance is just putting finance, it's putting the banks on the blockchain, the old financial system on the blockchain. And that's underway right now. But which ecosystems are going to be part of this? The only ecosystems that can be part of this are the ones that are building for it, right? The ones that have DeFi, the ones that have interoperability, the ones that have fee mechanisms to make money for the network. Because a lot of these ecosystems, they don't. You know, you can make money staking, but you have to understand, where is that staking money coming from? Is it coming from transaction fees? Or is it coming from inflation? And if it's coming from inflation of the protocol's circulating supply, is there a burn mechanism in place? That's another thing that you should be looking at. Which ecosystems have a burn mechanism? Ethereum has a burn mechanism. Solana has a burn mechanism. Tron has a burn mechanism. Binance has a burn mechanism. There's a lot that do have burn mechanisms to offset the inflation and kind of keep everything even, but some don't. Some have no revenue model, they have no fee model, and everything that is keeping the network running is just based on inflation. More coins being injected into the circulating supply. And then most of these coins end up on the market where they get sold, especially in the top of the bull market, especially in the rotation to a bear market. And then who ends up losing? You as a holder. And so we have to take all of this data in aggregate to understand, are these good investments? You can even look on the Blocks website. They have all of these different charts that you can go through to see like number of active addresses on the Near protocol, right? This is one of Internet Computer's main competitors when you're talking about AI. Massive drop off. But we also know there's been a massive drop off in the conversation around AI and the AI narrative in the mainstream and traditional financial space. You can see transaction counts on the XRP ledger. And you can take all of this info, compare it to the other chains, and identify, like, is there something better about this chain? Because remember, there's like 2 million different cryptos. And so identifying which ones are the best. The old days of just pulling up the coin market cap and saying, well, this one has the highest market cap, those days are over. Because now Wall Street's involved. Big companies are involved. Banks are involved. Debt issuance is involved. The Federal Reserve and the Treasury are involved. And that's just in the US. Think about globally. And so in this new world of the transition from TradFi to DeFi, in digital finance, we are going to see winners and we're going to see losers. And we're going to see some that are winners today and are losers tomorrow and vice versa. But we have to identify like which ones should we buy, because nobody really knows, right? Nobody knows which ones are really going to do well. And there's a lot of people who are saying these are going to do well, and there's a potential that they won't, right? Especially when they still have unlocks, like we were just talking about with SWE, or if they're saying that they have a lot of DeFi, but they have no interoperability, like we were talking about with XRP and Cardano. And so moving into potentially the bear market stages, we have to really understand all of these metrics, but not just these metrics. There's more. We also have to understand the utilization rates, and also are big companies involved in these ecosystems. For instance, CeeLo is a great project that we talked about last year, and I've been getting the question, like, how do you feel about CeeLo? I mean, I still feel pretty much the same way. My thesis has not really changed on CeeLo, even though network utilization has kind of fallen off a cliff at the beginning of this year, which is in line with what the market has done. But the thing is, CeeLo has Google validating on their blockchain. CeeLo is working for very high level integrations from a TradFi space, from a DeFi space, and so on, similar to like Polygon, kind of pulling some of the strain off of other chains. And so I am still bullish on that, but I've seen a major drop off in utilization. And this is not the only chart that we've seen like this today. We've seen a lot of charts where at the beginning of 2025, boom, everything went straight down. And so does this mean that we are never going to move higher? Or does this just mean that everybody's focused on Bitcoin and Ethereum? This is what I think is different about this cycle. This cycle, because Wall Street is now involved with Bitcoin ETFs, and you have the MicroStrategies of the world, the real focus this cycle has been on Bitcoin. And altcoins are not really a focus for Wall Street. For retail, obviously, we've seen that with meme coins. But I don't know that we are going to see in this cycle, in this Bitcoin halving cycle, the moves that many people were anticipating in many of these altcoins. But that doesn't mean that that's not going to happen in the next cycle or in the bear market. Because here's my thesis. If you look at Ethereum, for example, and Ethereum is kind of similar to some of these other coins that we've seen, they haven't reached their all-time record high, right? The all-time record high was almost $5,000, and we hit 4,000 and came right back down. And potentially double or triple top tier. You can see that right here on the screen. And so part of me is like, the bull market's over for Ethereum. It's just not hitting its all-time record high. Same thing that happened in 2021 with some coins like Litecoin. It went close to the all-time high, but it didn't hit it, and it's never gone above that since. That's a potential for Ethereum, or hear me out, guys, hear me out. We have seen all of the focus on these new coins that, the billionaires are pushing. Oh, SWE, I have 70% of my portfolio in SWE. It's like, what? Like, you have 70% of your portfolio in SWE, and you're on the advisory board, and this only 33% is circulating, and you're going to be getting new coins every single month from the admission rate. This is not an investable product, period. There's no actual product on it. There's no actual usage on it. There's no actual, especially when you compare it to an Ethereum of the world with all that's built on it, all the mechanisms outside of Solana, right? Obviously, maybe Solana is a little bit better from a network throughput standpoint, but Ethereum also has layer twos to kind of offset some of that risk away from the main chain, putting it on layer twos. And we have seen issues with Ethereum and layer twos like Polygon, but generally speaking, the network is operating the way that it's supposed to. And this is what Wall Street is looking for. Wall Street is not saying, oh, well, let's go buy some SWE and let's start building on SWE because this investor is 70% in and there's only 33% of the coins released. That's not what Wall Street is doing. They're looking at long-standing activity, long-standing development. And by the way, Wall Street has been funding Consensus, which develops Ethereum. And so there is a potential here that Ethereum has broken away from the cycle, and some of these altcoins that are, I call them Ethereum adjacent coins. very similar to Ethereum or interoperated with Ethereum or built on Ethereum, a lot of layer twos as well. Avalanche is an Ethereum adjacent chain, Polkadot, Ethereum adjacent chain. There's the potential, because these have so highly underperformed compared to where Bitcoin is, that as we are rotating out of the bull market, that these may actually perform better as the rest of the market is coming down. Remember, there's been a lot of promises about Solana, and Solana is the best performing crypto in this cycle. But a lot of people were just surprised that, specific investor was 70% in SUI and that no Solana, no mention of Solana. It's like, wait, the billionaires have moved on to another thing that they can just hype up with no product on it, right? And then just dump it for, who cares about Solana anymore? Who cares? Just SUI is better. SUI is definitely better. It's not, and it may be in the future, but it's not today. And so again, going back to the beginning of this video, which coins are worth buying? That's a decision that you have to make, because there's a lot of people who will disagree with me and say, Cryptoviser, you're an idiot. SUI is better than Solana. SUI is better than Ethereum. And this is why SUI is almost in the top 10. And it's going to continue to gain value. And that's a fair argument if you believe that. Personally, I don't, right? And if we remove Solana's huge numbers, right, from a lot of the metrics that we just went over, you can see that there's a lot of other coins that have the potential to grow to where Solana is on fees, on transactions per second, smart contract usage. But it still doesn't mean that Solana is better than Ethereum. Maybe they're both the same. Maybe one isn't better than the other. But we have to take all the metrics together and identify for our own portfolio which is the right thing. And what I think may be different than what you think, right? You may say, no, Cryptoviser, we have to focus on the market cap. No, Cryptoviser, we have to look at the revenue. We don't need to focus on transactions per second. We need to focus on who's building on the blockchain, how many developers they have, how many products they have, how much interoperability they have, or whatever the metrics you find the most important, because that's the beauty of investing. You can invest any way that you want. Maybe you'll be right, maybe you'll be wrong. The same way I can invest any way I want. Maybe I'll be right, maybe I'll be wrong. But at the end of the day, we're looking to protect our financial futures. We're looking to protect our retirement, because there's a lot of people who have zero for retirement and will have zero for retirement when they want to retire, and therefore they won't be able to. And so we have to focus not on the hype, we have to focus on the technology and the capabilities of these chains. Because if we are at the final stages of the bull market, we're going to have great opportunities in the next bear market, whenever it comes, to make really, really life-changing opportunities by taking positions in some of these products at their potentially multi-year lows in a bear market. But we need to understand where the fundamentals lie. And what I showed you on today's video is how to look at those and how to assess those. We did a little bit of assessment, but really the point of this video is not to do the assessment for you, because I'm not telling you what to invest in, and I'm not telling you what is the right thing to invest in. Because you may say, like I said, who cares about the fees? Who cares about the transactions per second? I want to know who's investing in it, where the Wall Street money's coming in. Because the higher the market cap goes, the harder it is to move it higher if you don't have the inflows. And in a bear market, the downward pressure of these market caps can be extreme. And so the same way that MicroStrategy doesn't look at their Bitcoin as just Bitcoin, they're trying to do Bitcoin per share. They're trying to change the way that you view that investment. So you're not looking at it like, wait, the price isn't going up. They want you to look at it as, wait, I'm holding this much Bitcoin in the share. And that's a very different way to look at things compared to the rest of the stock market. And in crypto, things are very different today than they were a few years ago. And I agree that market cap is not the only indicator that we should be looking at. We should be looking at transactions, volume, DeFi, interoperability, projects that are launched, developer activity, sentiment around the ecosystem, and also how it has already performed. because there's a lot of people that completely miss the fact that Internet Computer can not theoretically, but actually have higher transaction throughput than Solana. Maybe not right now when I'm recording this video, but within the last month, Internet Computer was beyond Solana in terms of total transactions per second by a very large factor, almost double. And so that's double Solana. Take the next fastest chain after Solana and let's look at it. After Solana and Internet Computer, transactions per second. The next fastest is Coinbase's Base, 123 transactions per second, and then Tron, and then Binance, and then Injective. And so if you take those all out, the next like other protocol is Near Protocol with 62 transactions per second. So that means Solana and Internet Computer are more than basically 100 times basically Near Protocol's transaction capabilities. And so how can you grow if you can't do that type of transaction throughput? And so, yeah, this is a way to look and identify like which projects are close, but just need to do a little bit more. Which projects have a little bit of everything, or do I want to be in a siloed blockchain that doesn't have any of these and say that it's going to go to the moon? Again, this is a decision you have to make for your portfolio. I kind of gave you guys my thesis and how I analyze and figure out where these blockchains are. But let me know down below, like which metric do you think is the number one metric we should be looking at? Should we continue to look at market cap, or do we need to look at fees or revenue or active developers or active users or active wallets or new wallets? These are all indicators, and maybe we need to take them all into consideration. Maybe we should make a crypto indicator index where we take a little bit of each of these indicators to come up with one number and identify, is that a good buy point? Let me know down below in the comments. Don't forget to give this video a thumbs up if you want to see other kind of videos on the channel. Let me know down below your suggestions, and I'll try to make it happen. Other than that, I'll see you guys on the next video. Invest responsibly and crypto on.